We have a serious slowdown in the economy. It's clear that economic activity has been stagnant despite historically low interest rates and record levels of stimulus. Why can't a market grow when artificial demand is present? Perhaps a real economy needs to develop out of the destruction of a failed system. Well, don't hold your breath because the central bankers will ensure that everything goes according to their plans. Are you ready? You came here for the truth, so let me unveil that for you. Today we're going to look at what has happened within real estate in the United States and Canada, so stay tuned for a jam-packed episode. Let's begin by taking a look at this article out of CNBC. New home sales dropped 5.5% in September to a 2-year low. And that right here shows us the weakness that is present. This is a generalization. This is an average. So when you look at different markets of Seattle and maybe you want to look at San Francisco and Las Vegas, you get a different picture than the average. There's no doubt about that. But we have to make some level of generalizations or it's going to be very difficult to form a conversation. Sales of new U.S. single-family homes fell to a near 2-year low in September, and data for the prior 3 months was revised lower. The latest indications that rising mortgage rates and higher prices were undercutting the housing market. I'm going to talk further about interest rates in a later part of this video, but just for the time being, let's stick with the United States and what has happened in just the recent past. Looking at the new home sales in the green line, if you can see it here, is going back into levels we hadn't seen since December of 2016. That shows us the severe weakness that is present, and it is simply because of everything that is taking place today. We had been looking at all these details and we've been wondering what's going to happen. Is it going to go faster? Is it going to go slower? What is it? Well, now I think it's pretty much understood that the slowdown is here to stay, at least for the foreseeable future. They have to turn it around with some sort of stimulus package, with some sort of quantitative easing, and if not, we will continue to see a slowdown. That goes for real estate, that goes for economic activity in general. Looking at the new home sales year over year change, I mean, come on, we're at the level right now that we haven't seen since 2011. This is a slowdown that you cannot deny anymore. Again, I'm generalizing because this depends on which market you're looking at. There are some markets that are picking up, and I'll show you that in a moment, but you look at the general economy, you look at the general housing market, and you start to really understand what's happening. New home sales months supply. We have so many homes on the market right now. It hasn't been this bad since 2011 in this regard as well. Now, when you think about it, what has to happen for homes to be able to be profitable? You need a buyer. Well, without the buyers, you're not going to have these things moving. You're not going to have the mortgage brokers working. You're not going to have the construction workers who need to do their job. And suddenly you have an oversupply, you have overstimulation, not enough purchases, and the economy starts to sink. It could come from various factors. It could come from subprime mortgages. It can come from a real estate crash somewhere in another part of the world. It doesn't matter. Eventually, it has to make its way into the economy, and it always overreacts. No matter what, we always see that the market overreacts and then finds this balance and then overshoots and actually overreacts at the top. And that's just a constant cycle. It's a sine wave that keeps on happening throughout history. It's nothing weird. We are going to experience this over and over again. A very expensive fixer-upper, San Francisco's smallest home at just 460 square feet, hits the market for a whopping $650,000, and it comes with pink walls, green tiles, and is in need of a lot of TLC. So you can actually look at the pictures if you're interested to see it for yourself. But it's basically a one-room house, it's a junker. They're just going to tear it down, obviously. But looking at the price of it, I mean, it's unbelievable. Just for that little tiny piece of land that someone's going to be paying $650,000 to then tear it down, to build some sort of very small house on top of it, probably value it at well over $1 million. And I'm sure someone's going to buy it up instantly. And that's the way it works, because this is a very hot market. So when we look at sales that are slowing down, it's coming in certain markets. There are other places like San Francisco, as I mentioned, that are doing very well still because of the tech-heavy industry that's there. That's part of the reason why. You can also see a lot of investors coming in to purchase up land and anything they can get their hands on, really. Boise and Reno capitalize on the California real estate exodus, and you can see that there are places like Boise and like Reno that are doing very well at this time, simply because California, although I got a lot of hate on the last video I did, I got a lot of hate in the previous video I did about California. These are the words that they are using themselves. They are calling it an exodus. When I use that word, I was criticized, but that's Bloomberg themselves using those words. And I'm tired of the criticisms when I'm quoting news articles. That's what I do on this channel. That's all. Anyway, not getting into that. This is basically what's happening. People are looking for more affordable housing, more affordable living, because it's too damn expensive. What else do we need to know? This is the chart that they're showing here. In the red areas, that's more than 7% year-over-year change in single-family home prices. And you can see where it's concentrated, that's for sure. Even an area like New York doesn't seem to have that. That's interesting. And Texas, I mean, it's getting there between that 5 and 7%. Whether you look at Texas or Florida or New York and so on, these places are hot, no doubt, but not quite as much as an area like California. That's just something I wanted to show you, the year-over-year change, but this is going to have an impact eventually. No few markets can support the rest of them, okay? There will be contagion, that's for sure. Slower growth anticipated in home remodeling. I'm not going to get into the article here, but that's basically what it talks about in this, and I think that it is important to follow all different types of indicators. You want to look at the permits, you want to look at what's happening in the area, look at all the cranes that are going up. Are there any stalled projects? Are people being given their money back? Are people having their money taken from them on new developments that never went up? You have to research that, and you can't just look at the price. I think it is so wild to see the fact that 99% of people just look at the price. That is complete insanity. I know so many real estate agents who will say, look, 10 years ago, I looked at the price of these homes and look at where they are today. Therefore, prices will go up. That is not an investment mentality. That's a speculation. You just formulated something in your head. You have a crystal ball that I don't see it. Maybe it will go up. Maybe. But I don't know that information, okay? You don't know that information. We are guessing. We can make educated guesses based on certain factors, absolutely. But to think that we know that it's going to go up because the price 10 years ago was lower and now it's higher, that doesn't mean anything. Now we're going to switch over to Canada right here. Sales of luxury homes in 2 of Canada's most expensive cities fell this year as the high-end real estate market continued to feel the impact of foreign buyers' taxes. That isn't exactly 100% true. But anyway, everything from $1 million and up, which is for the most part, that's pretty much all homes cost here right now. It's crazy. Condos are going into the $1 million range and beyond. You're seeing a lot of townhouses going $1 million and beyond. If you want to talk semi-detached, they're $1 million and beyond for sure. And detached, let's not even talk about it. These are all over $1 million. And all of these, they've slowed down in terms of their sales. So let's get that straight. Let's stop kidding around. Let's stop screwing around and admit the truth that the sales are in fact slowing. Let's just get that out. Let's have to truly understand the facts. Vancouver Chinese buyer inquiries, and you're looking at this directly from this Chinese website here, showing us that Chinese buyers are very interested right now in Vancouver real estate. Not in terms of how many they're buying, but this is just the inquiries, and they have been stagnating over the last little while. The prices have still gone up, there's no doubt. But in terms of the inquiries, they were lower and lower and lower. We see sales that are coming down slower and slower. But right now, they've just surged higher. So I'm going to follow this and see what happens. Now, very important news. The Bank of Canada increases overnight rate target to 1.75%. So this is directly from the Bank of Canada's own website. Remember that when I show you a statistic, it comes directly from the horse's mouth, from the source. This shows us that we can see Canada is increasing interest rates very slowly, but it is happening. That's going to have a direct impact on the mortgage rates that you see, and that's going to put a downward pressure on the borrowers. All right, excellent. That's wonderful. And here's a chart of that, looking at the key overnight interest rate now at 1.75%. It is still lower than what we're seeing in the United States and other places in the world, in fact, but they are ratcheting it up higher. It's going to take a long time, apparently, but they're doing it. And direct impact on mortgage rates, and that has a direct impact on the prices that you see in homes. Let's get ready for it. Once it makes it beyond that 2%, that means mortgages in Canada will start to become way too expensive for the average person. And actually, they're way too expensive to begin with, but it's going to actually make or break people in this case here. I'm looking forward to what's happening. That's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel, so I do appreciate that very much. And last but not least, if you want the financial education you were not taught in school, well then, these two books have it all. You can actually flip through these books. Just go over to Amazon. There's a link in the description. It's going to allow you to flip through the pages of these books to see if you like them. And if you're more interested in the audiobook version, you can get that at themoneygps.com.